Hey, so signs of an economic slowdown are everywhere, but there's a new elephant in the room that's affecting mortgage rates. Hey, so welcome to this week's Mortgage Minutes with Mitch. I am Mitch Jun, Senior Loan Officer with Your Home Financial. So I definitely don't want to be all doom and gloom, but there are some realities that we have to accept. Now, mortgage rates for the better part of the last year and a half have really tried to come down, but as soon as there's a little bit of a rally, something comes in and stops it, whether it's inflation coming in hotter than expected, or the big one, if you follow me, is the Bureau of Labor Statistics and their job numbers. So every time there seems to be some momentum, that comes in and kind of kills it and makes sure that interest rates do not drop. And this week, a new threat to mortgage rates has emerged, which we'll get to in a minute. So for right now, just to walk through some of these kind of doom and gloom headlines that we're seeing, showing us that the economy is slowing. Leading economic indicators, they came out negative again. So 25 of the last 26 months, those have been negative. 90-day credit card delinquencies, the highest they've been in 13 years. People are putting debt on their credit, and unfortunately, some of them are falling behind and not able to pay that debt. The University of Michigan, they have their consumer sentiment report they come out with every single month. That's down 14 points in just the last 3 months. So consumers are telling us they're feeling the pinch. It is hurting right now. Now, economist David Rosenberg, he has a very big problem with the job numbers, and he sheds some light on what's going on. Now, he thinks that in fourth quarter of 2023, the Bureau of Labor Statistics overstated the job numbers by about 521,000. Now, that's due to the quarterly census for employment and wages. And what that showed is about 116,000 jobs were created fourth quarter of 2023, in very stark contrast to the 637,000 that the BLS claims were added. Now, if you look at the breakdown here month by month, huge differences. The problem is each one of these reports beat expectations, the market responded, and there's not as much recourse once the revisions are released. It's always the initial headline that causes the market movement. Bottom line, the economy is not as robust and the consumers are not as resilient as the Fed keeps telling us that they see. Now, the new elephant in the room is the Congressional Budget Office, as I hinted at earlier. So here's what they did. So they released their budget and they said, hey, we're going to be over budget by $1.6 trillion. So hey, we're already 34 trillion over. What's another 1.6? Well, the problem is they were off by a large amount. So we're actually overspending by 2 trillion. So that's a $400 billion understatement that they originally said, and now is catching up. So here we are, 2 trillion over budget in just 1 year. Now, the problem with that is that debt has to be sold as treasuries, which then get absorbed into the bond market. Now, that's a simplification, but just know that's not good for mortgage rates. So all this news showing things slowing down, hopefully that'd be good to ease inflation. Well, that's offset by this ridiculous spending our government is doing right now. So what does that mean for consumers? Well, we're not going to see a dip in mortgage rates as quickly as we would like. When it'll happen, we don't know, but that's the reality of where we're at today. Now, if you are thinking about buying a home, I'll leave you with a few quick stats here. Now, you have an 18-month high in inventory, which is fantastic. More homes are hitting the market, but median home values are up 5.8% year over year. So the longer you wait, the more you are going to pay for that home. As I've been saying, waiting is not a great strategy. Now, the average home is selling in about 24 days. That is very quick, and that number seems to be shrinking. And about 30% of homes are selling over asking. Now, keep in mind, this is a nationwide average. This isn't local. And to be honest with you, I think our market here is a little bit hotter than average. So some of these homes are probably not on the market that long. I bet more than 30% are selling above asking here in our market. So if you'd like to take a look at your options and purchase a home this year, would love to work with you. Let me know how I can help. As always, thanks for watching. We'll see you next week.